Good morning and welcome back to Almus Market Mornings. While the eagle and the dragon meet up in the skies, discussing issues from Taiwan, Iran to rare earths, there was a theme which stood out. First, the dragon seemed emboldened. The commentary on Taiwan was clear. The big clash between US and China would be if US interferes in the Taiwan issue. Second, the red ties didn't seem to shell out for big purchases, which the blue ties were expecting. Just 200 Boeing aircraft orders as compared to some 500 that was expected. Boeing stocks, of course, fell after the meeting. Third, not really anything clear on the Iran issue except for those generic diplomatic readouts. Reality for markets is that Hormuz remains closed, oil is higher, and that's weighing on inflation. Just look at India's PPI yesterday, it was a shocker. Now, petrol and diesel prices in India have also been raised by rupees 3 per litre, and many more measures will come in time. Good morning, JK. Now we are at the end of the week. What are you expecting going into the weekend? And what was your take of this US-China summit?
Good morning, Swaraj. Yeah, I think this meeting, which is the most very closely followed by everyone in the world, has not been as exciting as some would have expected, and it has so far not produced anything very significant, excepting warm words and perhaps carefully managed symbolism. A few economic outcomes, like you mentioned, there is some aircraft orders, and there is permission or US actually allowing the NVIDIA chips to be bought by China and all that. But the big issues are still up for discussion. As it starts the second day, there is some excitement perhaps for the visitors, as there's a unique experience of being hosted at Zongnonhoi, which is a 1,500-acre site. Where pavilions and temples of where Chinese emperors used to enjoy their meals and leisure time. And in the last 50 years, only uh, three US presidents have been hosted there. So maybe that's the only excitement which they are looking at right now. There have been very cautious statements even from the US officials who have been visiting about the outcomes of the meetings. Yes, the the China Taiwan issue is foremost in the talks, and the fact that US has gone with a huge army of businesses and sitting in China for discussion itself shows who is in the driver's seat. China is definitely calling the shots. I think this Taiwan issue will figure out today more prominently. And Iran issue, where world had some expectations that this meeting could also bring out some sort of a diplomatic cooperation between the two to get the Hormuz Strait opened, doesn't hold much hopes so far. Although China reportedly agreed not to provide military equipment to Iran. So that's the only outcome so far, and I think. But one thing I can say, since the expectations have been very low, there is some scope for some positive surprise. But we'll just keep our fingers crossed on this. But in the meantime, the markets have rallied further in US, helped by Nvidia's revenue growth and outlook, as well as ability to sell their products to China, also helping them. So I think US markets check along despite the challenges from higher inflation and possibilities that US Fed is not going to cut rates. Possibly, now the expectation of a rate hike in US is actually increased. As per Fed was told, it is about 31.9% in December. So that's something that market is getting more and more aware of. So on the dollar has climbed for the fourth day. And the economic data from US has been quite resilient, while inflation has been higher and kept rate cut expectations lower. The Retail sales yesterday was quite strong. The control group, which feeds directly into the GDP, has also been strong. And it also establishes the fact that the higher fuel prices have so far not affected the consumer spending. So that is what is keeping the US economy on a stronger footing. And now this is also happening at a time when other countries are facing some challenges. Europe and Japan have to contend with more energy challenges as the war, or rather, the stalemate on the war drags on. UK has a huge political, issue where the leadership may undergo a change, and the incoming incumbent, if and when it happens, can be more left-leaning, which means that there can be more fiscal spending, and that's why the yields are also going up. So the pound has come off to below 1.34. US, even the euro has come down to 1.1650, having held above 1.17 for such a long time. Dollar yen, interestingly, has come near 158.50. Is slowly inching towards 159, perhaps 160 as well, which becomes a very contentious level where Japan has intervened in the last 1 month. And of course, this time around, who knows, they can be supported by the US authorities as well if it tries to cross 160. So the dollar is overall strong. It is also reflected in the precious metals, gold and silver, which were looking, in fact, silver, which was looking very strong in the last few days, almost touching 90, has come off to 81. Gold is, of course, broken some technical levels. It never looked too strong compared to silver, but that has come off to 4610 as well. Even the copper, which has had a huge rally in the last few days, has come off. So there is this general sense of dollar remaining strong across the currencies as well as the metals. And no doubt the US economies, US economy, and the higher possibility of rates being held steady at higher level is also keeping the dollar, well supported. Rupee, of course, yesterday it tested another new high. But there's some market reports which indicated government could be contemplating tax cut for foreign investors into Indian bonds. That got some Rupee got some boost, temporary boost. Of course, never broke 90. 95.50, and today, of course, along with the overall dollar rise, it has come to again 95, 90 levels. As I said, there is a rise in the petrol price, petrol and diesel price by rupees 3, but this is much less than what they should be doing in order to compensate the oil marketing companies. Indian crude basket has gone up by more than 50%, and we have been having this situation for well over 2 months, and rupees 3 increase is not going to do much. I think there can be more doses of increase in the oil price is what I think. There has been another regulation whereby the authorities could be taking measures to curb actual import of gold in terms of volumes. The measure includes a cap of 100 kg per authorization, mandatory physical inspection of manufacturing facilities, and requirement to complete at least 50% of export obligations under the previous licenses. So it's actually curbing of gold import. This is following the 15, rather the hefty increase in the custom duty for the precious metals that was seen as well. These ongoing. There were several governments, state governments are also directing for work from home for part of the week. So there is an all-round crisis type of approach that we are seeing from the government to conserve the energy as well as for the foreign exchange. Definitely, the rupee weakness has garnered much more serious attention from the government now. As you said, the wholesale price yesterday, rose to 42-month high at 8.3%. Of course, it was driven mainly by fuel inflation. Food inflation also contributed, but in a much lesser measure. Now, how far this wholesale price increase contributes to the retail price depends upon the pass-through, which of course depends on the government decision about hiking the fuel prices. While WPA is not a target that the Monetary Policy Committee tracks for their rate decisions, it will still be watched to see the gap between the retail and the wholesale price inflation, because that gap cannot be too wide. At some point, there has to be some pass through, and the retail inflation going up will make the RBI at least change their stance in their upcoming meeting on June 5th, if not a hike in the rates, but eventually RBI might hike the rates if the US Fed also indicates tightening bias. So that is what we should look out for. So the rupee getting only temporary supports and very, very shallow retracements that we are seeing, despite all the announcements that we have seen. We could see more announcements going forward. And, that's only probably slowing the rise of the dollar rupee. But with the current setting of possible war continuing and dollar, perhaps set to test 100 levels once again after consolidating at the lower level for such a long time, can put the rupee on course to break 96 and perhaps eventually test 96 half or 97. Yes, of course, the momentum has definitely slowed down because a lot of dollars have been bought and the market has been one-sided for too long. Thank you.
Thank you, JK. And yes, going into the weekend, it seems the domestic sentiment is quite somber in terms of the updates that are coming through. Of course, we have the rise in petrol and diesel prices. At some point of time, government had to pass it through to the retail side. But if you look at WPI, it rose to a 42-month high of 8.2%, largely due to fuel prices. But all of these fuel price, food price has started getting affected significantly for the country. And now even state governments are sort of vouching for people to do work from home to conserve energy. So a little bit of a crisis situation brewing up. We are also seeing reports that authorities may be looking at capping actual imports of physical gold. So we'll have to see how all of this plays out. As of now, rupee remains quite unaffected by this. We are again opening towards the weaker side. It's already at lifetime lows at 95.90, and maybe it may test the 96 mark today. So on the domestic side, this does not seem to be getting better as of now. And it's not just for India, but all the other Asian countries as well, which are energy dependent. They are facing these challenges. Apart from that, as we discussed earlier, the China-US summit was not as exciting as people were expecting. Nothing much on the Iran issue than what there were high expectations going into the meeting, and generally they were not met. That's it from us today. Thanks for listening. Have a great weekend. We will catch up on Monday with a fresh round of updates.